Welcome to this week's podcast. There's been a tremendous amount of disruption to financial markets during the past several weeks as President Trump rattles the threat of tariffs around the world. Here to discuss the impact of tariffs on US farmers and global food commodity prices is Dan Basse, President of AgResource in Illinois. Welcome back to the show, Dan.
You're welcome, Andrew. Glad to be back. Yeah, lots going on, unfortunately, and it's all affecting the farmer and the food ag chain. So, yeah, good to be with you.
And just for the record, we are recording this Monday, March the 10th, when US stock markets and stocks around the world, or US stocks at least, are trading at a 6-month low, just for some perspective there. So, Dan, US farmers produce corn, wheat, soybeans, and so much more. Crops are then sold here in the United States and then exported around the world. Give us a sense of the flow in and out of the United States.
Yeah, in and out on a broad perspective. So the world food basket and trade is about $1.4 trillion every year. It's a large amount, as you can imagine. Of that, the United States makes up somewhere around 180 to 190 billion, depending upon the year. So it is a big amount. We as farmers look at exporting roughly a third of our our corn crop, somewhere around 20% of our wheat crop, and upwards around 40% of our soybean crops. Most importantly, as you think about U.S. ag exports, it's going to be corn and soybeans and soy products that are the most important to the U.S. farmer, making up around 50% of the value of U.S. ag trade.
So, Dan, it's not like we haven't seen this before. What I'm trying to ask here is whether US agriculture is better or worse off for it. In 2018, the last round of tariffs cost the US farmer $28 billion in lost exports. Subsidies were paid to many farmers. And how did that trade war pan out? And have American farmers recovered from it?
Well, American farmers recovered because the president negotiated something called a phase one trade agreement. Now, remember, the last trade war was principally against China. China was the big target, if you will. China at that point decided to get into a trade discussion with the United States. It ended up being a negotiation with a USTR, a trade rep named Greg Dowd leading it. They did a very good job, and we actually were able to secure somewhere between $30 to $40 billion annually in terms of trade between China and the United States that were, I wouldn't say guaranteed, but promised by the Chinese. That lifted agricultural prices in 2020 and 2021, all the way into 2022. Thereafter, the 2-year agreement broke down. We're now back to not having an agreement. China continued to buy from the United States, but this new trade wrinkle as we have today throws lots of questions and clouds up into the air of the American farmer, both in terms of income and tradability going forward.
Tell us, Dan, how tariffs upset the apple cart.
They're a tax. When you think about a tariff, it's a tax. They call it a VAT in Europe. They call it a duty other places. We call it a tax. And so what happens is there's goods move across borders, taxes are applied, and as prices go higher relative to taxes, either consumption goes down or that cost is passed along to the consumer. Now, yes, some of it may be borne by the exporter, some may be borne by the importer or consumer. It all depends on how that negotiation process happens, but it is a tax in the system that ends up to be paid by someone. And so normally that tax translates into slower demand, likely differentiality. I can go backwards in time. Interesting, when President Nixon put an embargo or tax against U.S. soybeans back in the 1970s, this created in agriculture, Rio Grande do Sul, the breadbasket of South America. The Brazilians started producing soybeans. So when these taxes get placed, many people start looking for other suppliers of more reliability. And this, again, hurts the American farmer.
Give us a sense of how agricultural commodity prices have responded to the proposed tariffs, Dan.
They've gone down, as you can imagine, and it depends upon the day because they varied back and forth. Let's be clear on that. But in a general sense, when we started to see talk expanding about tariffs to our neighbors to the north and south, Mexico and Canada, the market started to reel from that, whether it be livestock or grains. Everything generally went lower, and we've seen a significant decline in the last 10 days accordingly based on the fear of tariffs and that maybe demand would be sliding or sources abroad would be sought.
Does anybody win in a trade war?
The economists can always argue that there's winners and losers. And in some cases, as I pointed back to the 1970s when Nixon put a ban on soybeans because of food inflation concerns in this country or tariffs, Brazil won because obviously it started Brazilian agriculture in a brand new direction. From time to time, we can look backwards. And now I can point to Brazil again since the 2018 trade war with China. China's now, of course, sourcing more supply from Brazil. Brazil has seen corn phytosanitarily. In other words, China must approve a crop and its weeds and everything else comes to their country from a phytosanitary basis. Brazil won that because of December 2022, their corn was approved. Now China buys more Brazilian corn than U.S. corn. So what this ends up doing without some kind of trade negotiation that really centers on the United States is that we expand our opportunities to others around the world and they become more reliable suppliers to some of the key import customers that we have in America today.
So it becomes a question of national food security around the world then.
It does. These days, no one wants to rely on one country for their food security, as you can imagine.
Right.
So this gets to be very important, Andrew, as we go forward in terms of diversification of suppliers. And for the longest time, when I first got in this business in 1979, the U.S. accounted for 52% of global ag trade. Today, that number's down at around 16%. So you can see how this has all declined over time. Now, sure, there's been the rise of Russia as being a grain exporter. There's been South America that's come along, but American farmers are not expected to see big growth in trade going forward. This is where the negotiation, if we're going to have it from a perspective of tariffs, needs to happen to solidify trade arrangements, not break them down.
And what about U.S. farmers? How have they been responding to the uncertainty?
Farmers that I've talked to through many conferences and being out in the country are very anxious. They're worried. Of course, we are still looking at the U.S. government provided $31 billion of ad hoc aid in the end of December. That will help bridge it a little bit here, but farmers like to produce for the market. They still like the opportunities to feed the world. That's why they're here. And so when they don't have that opportunity, they get very anxious and they're pensive about their future. Much of rural America voted for President Trump, so they're willing to give him some time. But at the same standpoint, they're not looking for CCC, Commodity Credit Corporation handouts, which was the case back in 2018 and 2019 to the tune of $27 billion. They would rather somehow get to a market, be able to produce for it, and help feed the world. That's what American farmers do best.
Is Trump right when he says that farmers won't have any competition domestically and they'll sell more at home?
We're still trying to figure out what he means by that. Is that implying that we're moving towards more biofuels, such as an E15? Today, we're mixing 5% of our gasoline supply or 10% of our gasoline supply with ethanol. Does he mean to add additional 5%? We're not clear of how that would happen because domestically speaking, the United States is already utilizing as much corn and soybeans as we can and wheat. No, we do bring in some livestock products. We bring in some select beef from Australia. We bring some Canadian piglets in from Canada. We import feeder cattle from Mexico and Canada. So maybe it's something in a livestock directive. But in terms of the big, what I call the three pillars of the food chain, corn, soybeans, and wheat, I don't know how that we're going to have additionality in terms of domestic demand. It's a big question mark that we're all trying to figure out economically and on the farm in terms of what President Trump was meaning.
And how much more difficult does this make your job?
Oh, my job is almost impossible because I tell clients I do not know what the next headline will be. And that headline will have a direct impact in terms of what grain or livestock prices will do. So we can stand back from this and still have our normal supply demand discussions, including Mother Nature and weather. Day-to-day price activity has become unpredictable, which is chasing some of the investors, if you will, from the agricultural space right now. More importantly, what I see visiting with some of the big commercial grain companies and others is that we don't have clarity in terms of what we should be investing in. Does it mean more biofuels? Does it mean more agricultural export structures? Does it mean more storage in the interior of the United States? We're uncertain, so a lot of them are just accumulating cash, a little bit like Warren Buffett trying to have rainy day funds available just in case the markets aren't as kind as we move into summer.
And Dan, I would sign off here. Is there a straw that will break the camel's back here in terms of what might happen in the spring?
I don't think the camel's back can be broken quickly, but if this went on for multiple crop years and farmers struggled through low income without government support, by that I'm saying what we call Trump bucks. It's been called from the 2018-19 period that Trump dollars would come to them, then the farmer would have some difficulty. Land prices would sag, farm balance sheets would struggle. We'd see more bankruptcies moving, unfortunately, in that direction. One of my big concerns as I sit with Farm Foundation is farm suicides, Andrew. Farm suicides have been rising sharply in the last 6 months. It's not something we like to see happening. And so any way we can prevent any of that. But stress and anxiety in the farm and throughout all of agriculture is really high right now.
Dan Basse, thank you very much for joining me today. Dan is president at AgResource in Chicago. Thanks, Dan.
You're welcome, Andrew.
All right. And if you enjoyed today's episode, don't forget, please subscribe to this channel wherever you download your podcast from. Bye for now.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com.